Hi everyone, welcome to our Microfinance 101 event. We just have a few more people trickling in, so I'll kickstart it in a few minutes. Beautiful. Happy to start here. Welcome everyone to MMI's first event of the year. It's quite an exciting one for us because we have never run Microfinance 101 before, so we're really excited to launch it this year. My name is Anita and I am the president of MMI this year. I will also be your host for the first part of this event. It's wonderful to see so many of you join us. If you have any questions throughout this session, please feel free to shoot a message to anyone who has MMI at the front of their name. And also just a heads up that we are recording this session. Next slide, please. Before we formally start the event, we would like to acknowledge the traditional custodians of the land on which we live and work and recognise their continuing connection to land, water and community. We pay respect to elders past, present and emerging and acknowledge that sovereignty was never ceded. So just a few points on housekeeping. First of all, please keep your microphones turned off for the duration of the presentation, but you are more than welcome to keep your cameras on. We'd love to see your faces. Secondly, there are a few Q&A portions of this event, and we'll be managing this through Slido. So there'll be a link in the Zoom chat, but also feel free to scan the QR code you see on the screen now. Feel free to also send through any questions you have during the presentations, and we'll filter through them at the end during the Q&A section. Lovely. So here we have our agenda for tonight. I'll kick off the event with a welcome and introduction to MMI and an introduction to microfinance more broadly. This will be followed by two presentations from our lovely guest speakers. We've got Megan from Good Shepherd Australia, New Zealand, and Dr. Abu Sharia from Monash University. The second part of our event will be an insight into how MMI embraces microfinance and financial inclusion in our pro bono consulting work. And then we'll wrap up the evening at around 8:30. Lovely. So to start off with, we have our story and how MMI came to be. So our founder, Fernando Tamayo, was a Peruvian student on scholarship to the University of Melbourne. And like many commerce students, he initially had an interest in investment banking. Then he met Hugh Evans, founder of Oaktree, and went off to exchange at the University of Pennsylvania. During his time on exchange, he came across the concept of microfinance, and he saw how individuals could be brought out of the poverty cycle, not through handouts and charitable donations, but through a concept as simple as a small loan. So he came back to the University of Melbourne and founded MMI in 2010. Since then, after his time in university, Fernando has launched a social enterprise called Yaqua, which is providing remote Peruvian communities with access to clean, drinkable water. And on the left, there's a photo of Fernando with our 2018 MMI committee. And on the right, a photo of Fernando and Muhammad Yunus, the pioneer of microfinance. So in terms of MMI, who are we? We were founded in 2010 and we are the first and largest microfinance organisation established at an Australian uni. So everything we do, all of the events, publications, initiatives we run, all centre around our core mission, which is to improve the lives of the marginalised by promoting sustainable and inclusive business practices to microfinance institutions and not-for-profits across the world. on the screen here, you can see we've got 3 key goals, and our operations division primarily takes care of student engagement, but all of our functions are quite interlinked. And on the right, we have a snapshot of some key insights of our impact. So over the past 11 years, we have run 42 consulting projects in 12 countries. Last year, we ran 8 events with total attendance of around 1,200. And we also believe poverty is a complex issue that requires collaboration and innovation across multiple organisations. So through our case competition and our publications, we collaborated with 50 organisations and student societies last year across 6 continents. So here's a quick view of our organisational structure. We've got our operations division and our initiatives division. On the left, you'll see one of our primary functions within operations is to create events such as these, with the aim to engage, inspire students with the knowledge, the connections, and the skills to go out and create their own impact. And in the second part of our event, we'll delve a bit deeper into how our initiatives consulting division works. Here we also have our executive team. So later tonight, you'll hear from Angus, as well as Jade and Faith, who will be presenting the work and an example of one of our projects on the initiative side. So here we've input a little activity, and we'd love for all of you to join the Slido using that number or use the QR code. And the question we have for you is, what comes to mind when you hear the word microfinance? So if you join the Slido and input your answers, it will sort of gradually start popping up as a word cloud, and we'll sort of get to see what are the most common responses. Please don't worry if you have no idea what microfinance is, or it literally sounds like small finance to you. We're welcoming any answers. I personally had no idea what microfinance was before I joined MMI either. Yes. So I'm seeing quite a few points on small. Grameen, yes. Great. Yeah, so it looks like alleviating poverty is quite a common answer, which is something that most of our presentation will be centered around as well. Poverty trap, small loan. Yeah, I think you guys have nailed it in terms of the sort of 3 key components that we'll be covering when it comes to what are the key aims of microfinance. Happy to go to the next slide, Rinky. So to understand microfinance, we want to go through what financial inclusion is. And according to the World Bank, financial inclusion is the access to useful and affordable financial products and services that meet the needs of individuals and businesses, delivered in a responsible and sustainable way. So here we have some examples of services which are the norm for the most of us, and sometimes services that we take for granted. These include transactions, payments, credit, savings, and insurance. So what these services enable us to do is they allow us to gain access to employment and social security benefits. They allow us to stay afloat if we need to spend money on unexpected expenses and weather any financial shocks. We're able to accumulate savings, plan for the long term, and also make investments for ourselves and for others. But unfortunately, traditional financial institutions typically do not serve the poor, leaving around 2 billion people across the world unbanked. And the reason for this is the poor are often far from the ideal customer. They lack a credit history, often reside in rural areas, and have little to no access to collateral, which leaves them excluded from traditional banking services. Essentially, this is where microfinance comes in. So the core goal of microfinance is to promote financial inclusion by providing these banking services to low-income individuals. And what these small-scale loans, or often known as microcredit, do is they enable people to start, invest in their businesses, expand their businesses, buy land or equipment, also to have greater income certainty. So they're able to keep their livelihood intact in the instance of unforeseen events. And third, to support their family through life cycle needs such as weddings, funerals, education, home building, etc. And MMI for the past 11 years has embraced financial inclusion as a very sustainable way to alleviate poverty, which we will dive into further. So we thought we'd give a quick history of microfinance, and the man you see in this slide is Dr. Muhammad Yunus, who is known as the father of microfinance. So Yunus pioneered the concepts of microcredit and microfinance as he saw it as a way to solve the problems of the poor in a way that's affordable to them. In the early 1970s, Yunus loaned $27 to destitute basket weavers in a village next to the university campus he was working on. And from that, he saw the power and the impact that a small loan could have. So in the 1980s, he established Grameen Bank. In 2006, both Grameen and Muhammad Yusuf himself won a Nobel Peace Prize for the work they conducted in creating economic and social development from below. Since then, the Grameen Bank model has expanded and operated in more than 100 countries worldwide. So here we have a snapshot of how microfinance works and sort of the customer experience. So we've got Maria, who's a beneficiary of microfinance. Just keeping an eye on time, I won't run through this all, but a copy of these slides will be linked in the feedback form. So please feel free to read about this in detail. But on the right, we have some key characteristics of the Grameen model, which includes a group lending structure that is designed to encourage people to repay loans, dynamic repayment incentives, a focus on women, who the reason for this is firstly, poverty in the developing world is often feminized, so that the majority of the poor are women. Women have also been shown to be less risky borrowers, and women are also more likely than men to invest their income in activities that improve the welfare of the household and thus raise overall development. Next slide, please, Rinky. Great. So whilst we recognise that microfinance is a really powerful tool and a successful one, we also know that it is not the complete solution. So some of the benefits here is that microfinance is an ideal source of credit for low-income groups who are able to access these sources of credit, which are more affordable and sustainable than the short-term capital offered by predatory lenders and loan sharks. It can also improve community relationships. So in some cases, microfinance has improved relationships through increasing collaboration and cohesion amongst women. It also works in disrupting gender hierarchies by providing women more independence and autonomy. At the same time, microfinance has been in the media in the past, and there have been controversies around the concept. And some of these criticisms include the fact that it can create debt cycles. It can be ineffective if it's used as the only tool and not accompanied by financial literacy workshops. At the same time, it can also disrupt gender hierarchies if some of the men in these communities are not equipped to deal with the change in the status quo and the dynamic. And finally, it ultimately does not reach the poorest segment of the population. It is still designed for those with some income and with a job who are able to repay their loans. And this is because the success of microfinance relies on borrowers being able to use credit to raise income through employment. So looking at this, we've listed out some other tools that we view as necessary. These include literacy classes, training programs to encourage entrepreneurship and management, investment in infrastructure, as well as legal reforms. But this is sort of a high-level overview of that evaluation of microfinance, which is something that we'll be covering further on in this presentation as well. Moving on from this one, I am very pleased to introduce you all to our first guest speaker, Megan from Good Shepherd, Australia, New Zealand. Thank you for joining us, Megan. I'll pass it on to you to introduce yourself and run through your presentation.
Thank you so much, Anita, and thank you for inviting me. Just before I start, I'd also like to acknowledge the traditional owners of the land on which we meet. I'm on the land of the Wurundjeri people of the mighty Kulin Nation, and I pay my respects to elders past, present and future, and also acknowledge that sovereignty was never ceded. It's great to be here. You have covered so much, and if anything, hopefully I, can at least reinforce some of the messages, because you're absolutely spot on, Anita, in what you were sharing. I'm just going to grab my screen actually, and we can get started on a few things. This isn't a long presentation. I'm hoping that it just gives you a little bit of a snapshot into what microfinance looks like in Australia, and we'll spend a little bit of time with some Q&A as well, hopefully. As Anita said, I am General Manager of Economic Participation here at Good Shepherd. It's a pretty amazing place to work. I feel really privileged to be here. And I've been with this organisation for about 2.5 years. My background's actually really quite diverse. Many years ago, I was in financial services. I worked for National and a couple of other banks in superannuation. I worked in disability services in senior positions, navigating through this complex world of NDIS. And I've also worked in health as well. And I've got qualifications in health, business, and also finance. So probably a good set of skills actually for this role. Can Anita, can you see my full screen, or is it only my half screen?
It's only your half screen.
Yeah, okay. Let me just sort that out then. I might actually just need to work off this. How does that look? Is that okay?
It's your half screen, but works perfectly fine.
Okay, I'll just make that a bit
beautiful.
better.
Yeah, perfect.
Excellent. All right. Well, let's kick off then. So yes, what we're going to cover off tonight, like I said, in just a few slides really, is a little bit about Good Shepherd. I thought I'd talk to you about disadvantage in Australia. It's an interesting discussion topic with in a country where GDP is so high. Why do we need microfinance? What's the role of the entrepreneur in creating social impact? And I wanted to just tell you the story about Good Shepherd and microfinance, because I believe we all have a role in creating social impact, and if it can happen here, it can really happen anywhere, and you guys are the culture carriers of the future, if you like. A quick overview of the operating model, and then a case study about how it works here as well, and then a Q&A session after that. So a little bit about Good Shepherd. It's an organisation that's been around for a very long time, over 150 years actually in Australia. We've got about 300, probably 350, maybe even close to 400 people in the organisation now. Around about 150 of those people are in my team, and my team's economic participation team. And we sit across financial inclusion, counselling and capability, and microfinance. So we've got a lot of wraparound services that come together for people who are financially vulnerable in Australia, and you can see there that there's a lot of interaction with clients, and we're growing that all the time. The other side of the business is around family violence and family support services. So really, Good Shepherd focuses on those two areas. Our philosophy, though, is that we work with and through others. So the collaboration that Anita was talking about is really a big part of what we do. We take very much a systems view of everything that we do. We work with many partners, both in community services and also in corporates and government, to bring together a whole lot of things that we wrap around our clients, so that they're in the best position that they possibly can be. So I put this slide in actually quite late in the piece. I think it's important, and Anita, you did touch on this, but you know, we're lucky to live in Australia, high GDP. What happens though is, like in other highly developed economies, the money doesn't always trickle down, and there's a huge amount of disadvantage in Australia, and there's nearly 3.5 million people that live in poverty. It's about, I think it's about 13% of the total population. And that is actually growing. So COVID has seen a lot of people who were vulnerable but able to survive financially because they had a job. The economic downturn has meant that they've either lost their job or they've had their hours cut, and women have actually been disproportionately impacted by job loss due to COVID. So we're seeing what we call this emerging newly vulnerable, alongside the considerable amount of people who already live in poverty. Going into COVID, job seeker payments increased. I'm sure you're all aware of that. They're about to be cut again, or they have been cut in some cases. What we're finding is that, you know, particularly again for those women who are receiving additional funding through job seeker, they were actually able to go out and get jobs, because it's almost like that Maslow's hierarchy. You know, they had food and shelter because they had enough money because of the increase in job seeker. And once they had food and shelter and they felt safe, they were then able to take that next step and go and get a job. So again, you know, there's the current welfare system that, through the research that we're doing, we're finding is really a barrier to getting yourself out of poverty in a lot of cases here in Australia. So I wanted to share that with you also, from the perspective, again, as critical thinkers and, you know, people who are going to go out there and really take the lead in social justice. It's that there are a whole lot of reasons for disadvantage, and there are a whole lot of things currently that aren't working within those systems to support people to get out of disadvantage. So, you know, education, employment, housing, health, access to community services, and for our Indigenous, the Indigenous peoples in this country, the impacts of colonialism as well is playing a big part. Microfinance is like a jigsaw puzzle. Microfinance is a piece in that jigsaw puzzle, but there are many, many other things that need to be done as well and coordinated to make a difference. A little bit about Good Shepherd and its journey to microfinance, which probably seems a bit like a strange journey, but we've the Good Shepherds is actually an order. There are currently about 30 nuns left in the order. They don't really have, other than from a mission perspective, they really don't have a big role in the organisation. The average age, I think, is about 85 now, but very entrepreneurial women. In the 1980s, 5 of those sisters really looked after what had been, or they had built a huge portfolio of property. In fact, for those of you who know Chadstone Shopping Centre, they actually owned and sold the land many years ago for Chadstone. And the reason they had the land, and they still have quite a lot of land around Abbotsford, is that they purchased housing in areas of significant disadvantage. And as those areas gentrified, the value of those properties increased. So all of a sudden, the order had a huge property portfolio, and the focus for the sisters was really around financial stability for Good Shepherd programs and services. So 5 of those sisters, and you see them in those photos there, they were really charged, along with a couple of outsiders. They were really charged to manage this huge property portfolio, and they are incredibly astute. They're very, very, very much entrepreneurial women. They work very, very closely in their communities. They knew their communities were caught in this, poverty trap even back then, and that many people were unable, because of their credit ratings, because their ability to service a loan, they were unable to go to the major banks. So they came up with this idea to start microfinance in Australia, and they put $20,000 forward, which was quite a lot of money in 1980 actually, to start the NILS program. And they started lending that money to vulnerable people for the same things that we lend today for, actually, white goods, schools, school fees, those sorts of things. Their advisors said, okay, well, it's your money. We advise you to think carefully though, because we don't think anyone's going to pay that money back. Well, every single dollar of that 20,000 is still circling around in the pool of funding that we have to lend out. And in fact, about 95% of the loans that we make are actually paid back. So it's made a huge difference to people's lives, but it was really, the 5 sisters sitting around thinking about how they could solve the problems that they saw their communities facing, and they came up with these ideas. So we often tell that story. I think it's a fantastic reflection on, if 5 sisters from Good Shepherd can do it, then collectively, we can all make such a big difference. So just moving on, what does microfinance at Good Shepherd look like? So it probably looks a little different. I noticed that a number of you in the word cloud were talking about emerging economies and microfinance, and what microfinance looks like in those emerging economies. Quite often, microfinance in those economies and to those communities look very much around like building a business. We'll give you some money and it will help you build your business, and in building your business, you start to move out of poverty into financial sustainability. Ours is a little different in that we have a very small portfolio of people that we finance around their business. It is something that we'd like to grow, and we have started thinking about how to do that. But our model really is about providing support to people to purchase essentials. So we work a lot with women. About 60% of the people we work with in what we call NILS, or no interest loan, is women. There's also a high percentage of the cultural and linguistically diverse community as well. Very much low income. The majority of our people, the people that we lend money to, are on Centrelink. And often not only financially vulnerable, but often socially vulnerable as well. So come to us with poor mental health, with an experience of family violence, with gambling or alcohol and other drug issues. And through the interactions that we have with people, we support them much more broadly than just through the microfinance. So we do that through what we call a financial conversation, which is essentially an ability to identify their needs, work with them to identify their needs, and then to be able to support people based on particularly their primary needs. So if someone needs a loan and they also need support with mental health, we're able to refer them into other programs. And that is really the philosophy about with and through others. We start to stitch together the system so that people can get the support they need. So someone who is looking for a no interest loan can access it through a number of different ways. We partner with over 1,000 community-based organisation sites right across Australia. We've got 8 stores that we own ourselves. They're the Good Money stores, 4 here in Victoria, 1 in South Australia and 2 in Queensland. We have about 40 people in a teleservice area, and it was something that we built last year. It's a really innovative model. It's a complete work from home model, which probably doesn't sound strange in COVID times, but we actually started building it before COVID. And the reason we want it to be work from home is because we want to employ women who live in regional areas, for example, who find it difficult to find jobs in their own community. So we wanted to create something where we could really live the mission and start to impact the cycle of poverty by offering people employment opportunities. And we are just also going online as well with some of our services. There's a number of NILS products that we offer. All of them are no interest, no fees. Depending on the type of product, the payback period is 12 to 48 months, and for the most part, there's no credit checks. So there's 3 main loans that can be accessed up to $1,500. That's for essentials, and that's where most of our loans are actually. So white goods, school fees, school equipment, IT, health, household repairs, car registration. There's a huge list of things that we will lend for up to $3,000 for rent and utilities, and up to $5,000 for motor vehicles. And that's something that we will have by the end of May. And we're so excited about that, because what we find is often having a motor vehicle or not having a motor vehicle is a huge barrier to employment for people. And like I said before, the opportunity we have to speak to people means that we can work with them around the other vulnerabilities that we have or that they have, so that we can support them to access services. So we're starting to think about what this looks like from the perspective of the whole person and how we can support that whole person. Our operating model is actually a pretty simple one. Everything's centralised for the most part through Good Shepherd, the back end anyway of that operating model. We do all their credit approvals. We've got all the systems in place. We manage around about $150 million of capital. That's provided by a couple of major banks, CBA and NAB. Put forward the capital for us. We do all the reporting, funder requirements. We have a quality team and finance, and then also support to the distribution network. So what you would expect to find in an organisation that's originating 27,000 loans a year and growing significantly, and also managing those 27,000 or whatever it is, number of loans that we've got at the moment. Our operating costs are paid for by government. So we receive funding from state government and federal government, mainly DSS within the federal government. So it's operating cost, and like I said, the major banks provide the capital funding. It's about, like I said, $150 million, and 95% of that is paid back. So it just keeps circling through. So that's sort of the operating model. I wanted just to talk to you very quickly. So this is a statement here from what is sort of a medium amount credit contract. They call them MACCs. This is a loan shark in my view. Microfinance is really important because it is a substitute for high cost credit. This is a statement that I carry around with me all the time because it really shows the damage that this high cost credit could do. And if there's one message, you know, to you and to anyone that you talk to, is don't go near any of these guys, because they're absolutely terrible. So this is a real statement. The information's been redacted. It's a single mum. She's got one child and she needed a car. She needed a car to take her child, young child, to school and pick her child up and also to get to work. And so she borrowed $13,000 just over 2 years ago, June 2018. And for that, to get access to that $13,000 through this loan shark, she paid on top of that a broker fee of $990, a loan admin fee of $2,400, and a loan establishment fee of $595. So before she even started, she had a $17,000 debt. Her monthly interest was between $270 and $300, about 21. It's actually higher probably than 21% interest. Her repayment was $520 per month. So remember, this is someone who's financially vulnerable, on a very low income. She was desperate to get the car, but she was up for $520 a month. And of course, she couldn't pay that. So she kept getting dishonour fees of another $28 a month, arrears interest. And then on top of that, when they rescheduled the payment, they charged her another $28 a month. And on top of that, she had a monthly administration fee of $25. So over the 2 year period, just over 2 year period, that the loan was in place, she actually paid back $6,300. So she paid that back on a $17,000 loan, and in September 2020 she owed over $19,000 because of the interest, because of the additional fees, and everything else that she had. So this kind of debt for someone who is vulnerable is almost impossible to get out from under. And it's why we work so hard here at Good Shepherd to create awareness of the services we offer. We don't lend up to $13,000, but what it has done is it started to inform some of the ways that we work with people. So the no interest loan for cars, for example, really came out of, you know, partly out of this statement and knowing that we need to support people as much as we can. Obviously, there's some constraints for us because of the capital provision that we have, and our ability, we have to work very closely with our capital providers around the risk and so forth. But we're starting to really chip away at these high cost credit providers, which is what I get up every day to do. So very quickly, just to finish off, really is a quick case study. And again, we see this every single day, hundreds of times a day. Again, predominantly women are impacted, particularly single mums with children. When things change, they change very quickly. Often women have very insecure housing, so they're renting, they don't have a house or an asset behind them. If they get sick or lose their jobs, things can get bad very, very quickly. And Joanne actually had to leave work because she had a cancer diagnosis. She didn't have a lot of savings. She didn't have any insecure housing. She had to pay her rent. There was it was that, or she was without a home. And it's often the little things. The fridge broke down. To her, her fridge, like all of us, is incredibly important. It's how she fed her kids. She couldn't live without a fridge. How do you get better when you're constantly worrying about how you store your food? So she was able to access one of the Nils providers. We've got a partnership with Good Guys, And that partnership allows people who have a no interest loan to be able to purchase white goods at a very low cost, and they get free delivery. We also have access to financial counsellors, and I have actually got a team of financial counsellors here who work with people in financial crisis. They're able to negotiate with creditors, and in this case, they were able to negotiate fee reductions on the credit cards that she had. So the outcome for her is that she, didn't have to worry about where she was going to store her food, what kind of, food that she could keep. She was able to reduce the ongoing debt because of the financial counsellor, and she also had a much better understanding because of that financial conversation that we had to her about the help that is available to her and where to contact if she needed help in the future. So Anita, I think that's pretty much it from me. Hopefully I've stuck within the 20 minutes.
Thank you so much, Megan, for your presentation. That was very insightful, and it covered a good range of, I guess, the different aspects of GSANZ, stemming from how the organisation started as well. I know, particularly for me, your final two slides on that loan shark statement, I think it's something that we all hear about or we see in movies, but to hear those details and how individuals are really affected, it was really great insight, but it was also very sad as well. And stemming off that point, we've got a question from the audience that revolves around the fact that, does Australia have consumer law offer any sort of protection against these predatory businesses?
So actually, Australia has considerable consumer laws to protect people, but unfortunately these predators work within those laws. Well, I say they work within those laws. I've seen plenty of times when they don't actually work within the laws, the law, but there is very little impact on them for breaking the law, to be quite honest with you. And there's some legislation that's being debated at the moment that would actually give them more power. A lot of them, they're pretty crafty, so a lot of them are sort of saying the right things and trying to get themselves around the table to have those conversations at government level, because obviously they don't want more restrictions on trade. So we're seeing them do some pretty crafty things at the moment. They're, making voluntary commitments and those sorts of things as well. But there's not enough, in my view. They position themselves as bright and shiny and very quick to turn around money. They often make cash very available, so people with gambling or substance abuse addiction have very easy access to cash. They're just bright, shiny, and they don't talk about the fees until it's too late, really. I mean, I think it's outrageous, just the origination fees that organisation charged. There was, over and above the $13,000 that person borrowed, there was, $3,500 of fees just to set it up. And I can tell you, it does not take $3,500 to set up a loan.
Yeah, and I think especially when you look at how enticing that loan is, it's very risky when it comes to these firms targeting the most disadvantaged and vulnerable people, which you mentioned is what you get up every day to do. You have quite a diverse background in terms of your skills. Why did you choose to ultimately, at the moment, end up in microfinance instead of, traditional financial services or any other type of work?
Yeah, it's a very good question. I guess partly because of my background. So I came from a financially vulnerable family myself. Probably doesn't seem that way. I actually left school, believe it or not, at the end of year 10. I grew up in the country, and some family circumstances happened. So I always knew I wanted to go to university. I was always top of my class, did all that sort of thing, but I had no choice. So it wasn't until I was about 22 years old, actually, that I went to university, and I loved every single day. I worked every single day. In fact, one day I had, 1 year I had Good Friday off, not to study. That's how happy I was to finally be at university. So I guess I've carried with me this feeling of being incredibly lucky, and that sort of took me down a pathway of studying health. Actually, I have a master's in health, which I got only a couple of years ago, because I really wanted to understand how systems work together at an individual, a community, and a policy level to change outcomes. And it was really that understanding, I guess, overlaid with you know, social justice and human rights that you kind of come across all the time in public health, that got me very, very interested in community services, and, you know, really interesting complex models and solving complex problems as well. So a bit of a long answer, I guess, but a bit of a winding road, but a sort of an understanding about give someone an opportunity, help them a little bit, and they can do some, you know, pretty amazing things.
Yeah, which fits in exactly to GSANZ's mission as well.
Yeah.
You, before in your presentation, you sort of spoke about the impacts of COVID, as well as how women have been disproportionately affected. I guess for yourself, why do you think women were disproportionately affected by the pandemic? And more importantly, how can we prevent this in the future?
So they were disproportionately impacted because, for a couple of reasons. They are often employed in retail and hospitality. So those, that's where the doors had to shut in lockdown. So hours were reduced, or people lost their job. And most of the people working in those areas, as we know, are women. Women are also often secondary breadwinners, so they have, you know, jobs that are casual or part-time. Again, those are the jobs that went first, the casual jobs. So that's why they've been impacted. And of course, that's okay if you've got a partner at home and, you know, perhaps you've had your hours cut or reduced, but your partner's still working. It's a different story for women who are single, or single and with children, even more vulnerable. We also see a lot of those women have insecure housing, which is a real issue. If you can't pay your rent, then you know, it can be very, very difficult. And while there were some remedies that people could access about rental moratoriums and those sorts of things, most of those have ended now. So again, while a lot of women are transitioning back into the workforce now, there's still a lot that are left that are vulnerable.
Yeah, some great points you raised, Megan. Just keeping an eye on time here. Happy to wrap it up here. Once again, thank you so much for taking the time to come and present at our event. And I'm sure I speak on behalf of everyone to say that was an incredibly insightful and also a comprehensive presentation that really encourages us to reflect on the opportunities we've been given, and also the broader landscape in Australia and how financial inclusion and resilience is still quite relevant, despite how lucky Australia is as a country as a whole. So thank you for your time.
Thank you so much. Enjoy the rest of the night.
Thanks, Megan.
Thanks, Anita. Bye.
Bye. All right. Now we are prepping for our next guest speaker, Dr. Busharia. But in the meantime, please feel free to take a few minutes, grab some water, grab a snack, and we'll see you back soon.
Hey, Anita.
Hi, John.
Hey there. Um, I'm a professor of economics at the Melbourne Institute. I would really like to talk to your group. Um, we do a lot of work on financial well-being, and we have developed financial well-being scales that I think are relevant for Australia. So maybe sometime after this presentation we can connect up
Yeah, of course.
as a way of sort of thinking about ways in which we can measure the extent to which these programs are being effective or not.
Mhm. I'd love to connect with you
Yeah.
following this event. I'll send you through an email through the Zoom chat. Happy to arrange a time to meet.
Okay, great. Thank you. Fantastic initiative.
Thanks, John. Right, happy to kick off to the next part of our presentation. It's my pleasure to welcome Dr. Abu Sharia, who has generously donated his time to attend Microfinance 101. He's also been involved in some of MMI's past initiatives, so great to see you back, especially at our inaugural event. Pass it on to you, Dr. Sharia, to introduce yourself and dive into your presentation.
Thank you, Anita. Hey, my name is Abu Zafar Khadiar. I'm a senior lecturer of banking and finance at Monash University. I have been doing primary research in the area of microfinance, financial inclusion, crowdfunding, and entrepreneurship. My research is based on low-income communities, primarily in Bangladesh and other South Asian countries. That's all. I have been here at Monash University for almost 8 years now, teaching business finance at this moment. Yeah, so this is, you want me to start my presentation, Anita, or?
Yeah, sure, go for it.
Okay, okay, thank you. So, okay, excellent. So today I'll briefly talk about microfinance. This is the synopsis of my presentation. I'll talk about the role of microfinance in the overall financial inclusion landscape. Financial inclusion refers to like having access to a formal bank account, Okay, and in the recent past, microfinance has played a very important role in developing an inclusive financial system all over the country by offering financial services in low-income communities. But today, I'll try to answer 4 questions broadly, and I'm happy to take questions after the presentation. Okay, so first, I'll try to answer why do we need specialized financial intermediaries at the bottom of the income pyramid. Okay, so financial intermediaries, banks, have been there for a long time in ancient Babylon, ancient Egypt, Indus Valley Society. We did have some sort of banking services, but still, in the late 20th century, or even in the 21st century, we know that almost 1.6 billion people across the world, they do not have access to formal banking services. Okay, so why do we need special financial intermediaries for those who live in the poor, low-income communities? Okay. Then what financial technology has given microfinance institutions the ability to serve those people who are excluded by formal banking channel? We'll talk about broadly the impact of microcredit or microfinancial services on the loan recipients, and we will talk about the trend in the industry. Okay. So as I said, roughly 1.6 billion people in the world do not have access to banking services. And most of these people, almost half of these people, live in 7 countries, 7 developing countries like Bangladesh, China, India, Indonesia, Mexico, Nigeria, and Pakistan. Okay. It has been recognized that having access to simple bank account help poor people increase their savings. Okay, it helps poor people to invest in profitable income generating activities like small businesses. So it improves the overall income level of the household and at the community level. Okay, and right after the Second World War, so when many of the developing countries of the world, they became independent from the colonial powers, those countries, they started to help poor farmers so that they can get access to easy credit at low prices. Okay, so mostly government-owned organizations, government-owned banks took initiatives, special credit programs to help poor farmers. I'm talking about the mid 50s and early 1960s and also 1970s. Without exception, without any exception, we can safely say that there was no example of success. Starting from India to Indonesia to Nigeria to Brazil, we don't have much success. Okay, if I say there was no successful story, I don't think I'm wrong in saying that. Why did this happen? So primarily, okay, before going there, if you think that the poor people do not get loans from banks because poor people run small businesses and those small businesses are not profitable enough, this is the reason why banks are reluctant to lend to poor people. If you think towards this line, I think we should revise our thoughts, okay? Because here's an example of very rigorous economic study. These authors, like Suresh Dimel from Harvard, Christopher Woodruff from Oxford, and McKenzie, they ran a randomized controlled experiment in Sri Lanka. So they provided small credit to a group of entrepreneurs in Sri Lanka, and after a certain time period, they measured that the rate of return to capital was around 60%. Okay? And it is just one of many studies which have shown similar evidence, which means micro enterprises in low income countries do make adequate profit to repay a loan with, say, 20 or 30% interest. It would not be a problem. However, these are the problems. Okay, these are the problems. Like, banks have inadequate understanding of the working of rural credit markets. They have inadequate understanding of information and enforcement related problems. So, for example, at the loan granting stage, they don't know how to screen credit-worthy borrowers. Okay? How to differentiate bad borrowers from good borrowers at the loan application or loan granting stage. Then once a loan is granted, they cannot monitor the actions taken by a borrower. Okay? And once a loan has been repaid, they don't know the actual outcome of a project. Okay, so for example, an entrepreneur who has made profit actually, but falsely claim a failure and default intentionally. And this is something what happens. So we have problems at 3 stages: screening, monitoring, and enforcement of legal contracts. Now, these problems are common in any lending market, no matter whether it is rural credit market of low income communities or developed market. These are the problems that any bank faces. However, banks in developed countries or commercial banks in low income countries, they use credit scores and they use collateral to solve information and enforcement related problems. Okay, and in developed countries, like, the legal enforcement system is also much better than low income communities. So the use of credit score and collateral, they have limited use in rural credit markets. Okay, that's why most of the banks, government owned or private, have failed in the 50s, 60s, 70s, or even 80s. And against this background, microfinance institutions have shown that credit can be successfully given to low-income people with very high repayment rate. Okay. Now, you may have heard about the Grameen Bank. Okay, it is a pioneer micro-lending institution or microfinance institution. The first microfinance institution in the modern history. Okay. It was established in 1976 as a pilot program, and it started operating as a full bank, as a fully licensed bank in 1983. They have first shown that credit can be successfully given to low-income people. Okay. Now, what have they done? What has driven the success of Grameen Bank and other microfinance institutions across the world that build on the Grameen model? Okay, so first of all, Grameen has innovated some lending mechanism which rely on the use of social capital. Okay, so for example, group lending. Group lending is common in Grameen and Grameen style microfinance institutions. So how do they solve information problem? Under group lending, or sometimes we call it joint liability lending. Under group lending, a group of borrowers, they collectively take a loan, okay, collectively apply for loan, if the loan application is approved, each member of the group individually receives a loan, but repayment of the loan remains a collective or joint responsibility. So say, for example, if Angus and Shahriar, we are in the same borrowing group, if I default on my loan, Angus will be responsible for repaying my loan. Otherwise, we both will be considered as defaulters, and Grameen or the microfinance institution will shut the door for us for future borrowing. Okay. Now we are credit constrained people. We do not have access to formal banks. We have a business and we know we need working capital loans. Okay. So we have incentive to repay my current loan so that I can get another loan from the bank in the future. Now, once loans are given to a group instead of individuals, the group members have incentive to select credit-worthy borrowers at the application stage and to monitor each other at the loan utilization stage. And remember, these women, you can see in the photos, these women, they live in the same village. They are neighbors and they live in a close-knit society. Look, this model, this Grameen type model may not work in downtown Melbourne, where people living in the same apartment do not know each other. But think about rural Bangladesh or a rural South Asian or African village where villagers know each other. Okay, they do care for each other's well-being. In this kind of scenario, if loans are given to group of borrowers instead of individuals, they have incentive to select creditworthy borrowers and they have incentive to monitor their peers' action. And in this way, screening and monitoring responsibilities are transferred onto the borrowers successfully. And Grameen has proven that this model does work. Okay. Another innovation is dynamic repayment incentive. So in Grameen Bank or a similar other banks, if you repay your current loan, you don't have to apply for the next loan. You automatically become eligible for the next loan with larger size. Okay. So if you see in this model, both the stick and the carrot are very strong and visible. Okay. They rely on social capital and it has been proven successful. Okay. In addition, repayment are made on a weekly basis instead of monthly basis. Poor people, they repay on weekly basis, which is easier for them because for poor people it is difficult to control the temptation and save a large sum of money and repay at the end of a month. Rather, it is easier for them to accumulate small saving to meet weekly repayment schedule. So that is another success story, another recipe for success. And repayment is made in public. So if you don't repay your loan, you're subject to social, you may be ashamed in front of your neighbors. Okay. We cannot think of this kind of model in a developed country like in Australia or USA, but in a close-knit society, this model has worked like very well. Now, finally, intense monitoring by loan officers. So far, most of the researchers have ignored the role of the loan officers, but in a recent study, I have shown with my co-authors, John Barnes and Luisa Unda, that loan borrowers who are more intensely monitored by MFI loan officers, they are more likely to repay their loans on time. Okay, so loan officers, they also play a very critical role in microfinance institutions. Now, I think I have taken already 17 minutes, so I'll finish very within 3-4 minutes. You see, there have been many rigorous studies which have investigated the impact of microfinance on household consumption, household income, children's education, creation of new businesses, and women empowerment. Okay. If you are affiliated with a university, it is not difficult to find the relevant literature. But let me summarize. The evidence is very split and mixed. There are some studies, some authors, they argue that microcredit has positive impact on those one or more of these components. But many studies, many authors argue that the impact are, very minimum or very moderate. Okay. From my reading, I think more researchers, there are many more researchers who believe that the impact of microcredit is moderate. Okay. And there are fewer people who believe that it has positive impact overall. To me, the question itself is not correct. The question that does microcredit eradicate poverty? The question itself is perhaps not correct because we are perhaps expecting too much from microcredit. Okay. Look, these people, poor people in Bangladesh, India, in South Asia, Africa, they didn't have access to banking services, and microfinance institutions have brought them in a formal banking channel. Okay, so that is the beauty, that is the success of microfinance. If we expect that a $100 loan will take you outside the poverty line, you are below the poverty line for, these people have been below the poverty line for 3 generations, 4 generations. With a $100 loan, you cannot simply take out these people out of poverty. This is too much of an expectation from microcredit. That is my personal view. And that is my personal reading. I spent a lot of time in the last decade in the field to understand how microcredit works in the field. So it is not a panacea. You cannot expect that it will solve the problem of poverty, unemployment in the low income countries, but having access to banking services is a fundamental human right. You can these days you can consider it as a human right, having access to banking services. Okay, that is the beauty of microfinance. Okay, I'm happy to take your question and address and talk more about these topics. And this is where the industry is now going. Okay, I'll talk about these problems. This is where the industry is going now. Initially, they started as non-profit organizations, non-government organizations, but these days we see an increasing trend of commercialization, where we can see more and more commercial banks entering into the industry and more non-profit providers becoming for-profit providers. Okay, and as a result, the composition of the borrowing pool is changing. So we see more not so poor borrowers in the borrowing pool and less poor, or the poorest of the poor in the borrowing pool of microfinance institutions. We see less female borrowers than we used to see 10 years ago, and we see less funding being available to business startups as opposed to like established businesses. So this is the current trend of the microfinance institutions. I think I should stop here now because I have taken more than 15-20 minutes, but I'm happy to answer your questions. So I'll stop here but I'll leave it to you.
Thank you, Dr. Abu. Some really great insights from that presentation, and one of which we have some audience questions on is about that group lending structure. So did Grameen Bank always operate under this method, or was this an insider system developed through research?
No, it didn't develop it through research. It was an innovation of Grameen Bank. Okay. Grameen also provides individual loans. Okay. So there are some loans, say for example, education loan, housing loan. These loans are given to individuals. Okay. If you look globally, I think there is like 50-50 balance. 50% loans are given to groups, 50% loans are given to individuals. But we can see more individual loans and less group loans in the recent past. So individual loans are becoming more popular in microfinance as well. Okay, so does it answer your question?
Yeah, it does. And in terms of your final slide that touched on recent trends in microfinance, how do you think the pandemic and this immediate need for financial inclusion and resilience more than ever will continue to impact the microfinance industry over the next 5 to 10 years?
I cannot say what's going to happen over the next 5 to 10 years, but I can tell you what's happening now. Okay, because things are so uncertain with this pandemic, it's very difficult to say, forecast anything over the next 5 years. That's my understanding. So what's happening here is, first of all, borrowers are being affected. Okay, their businesses are being affected. So many borrowers are struggling to repay their loans. Okay. Now, most microfinance institutions these days, they offer saving services, saving schemes as well. Okay. We see an increasing trend of savings withdrawals during the pandemic. Okay. So microfinance institutions, on the one hand, they are going through high repayment problems, higher withdrawals of savings. So some of them are complaining that they are like experiencing credit crunch. They are experiencing lack of supply of loanable funds. Okay, so these are the things we are currently observing in the microfinance industry. The good thing is governments across the world, they are trying to help poor people, and they're trying to help poor people by bringing them to social security system. So that is helping in most of the countries. Some microfinance institutions have delayed their repayment requirements, and they are receiving support from government and other donor agencies for helping the poor people. So there are good signs. If we can successfully control the pandemic, it may not be that bad in the long run, but as I said, we don't know what's going to happen. Say, for example, in Bangladesh, even 3 weeks ago, we thought we have kind of successfully controlled the pandemic, but over the last 3 weeks, things have gone really bad. So people are now experiencing the second wave, and which is much more rigorous than, more serious than the first wave. So we actually don't know.
Yeah, of course. It's obviously a very volatile situation as well. We've got another question come in about the appropriate measures to manage credit risk coming from the recipient of the financing. What do you think are some appropriate measures that should be taken?
Sorry, I didn't get the question.
That's okay. So what are some,
Yeah. I couldn't hear it properly.
can you hear me now, Dr. Abu?
Yeah, please.
Yeah, great. What do you think are some appropriate measures to manage credit risk coming from the recipient of the microfinancing?
Okay, look, as the industry is growing very fast and it has grown very big, I don't think there is any alternative of information sharing. So what happens in conventional banking sector in a developed country? If you default with a Combank loan, ANZ is informed because there is a risk sharing mechanism among the banks. So if you default on a loan, it affects your credit score and your credit score is shared by all the banks. We need this kind of mechanism in the microfinance industry. Okay, otherwise, we don't see, I don't see any effective way of reducing credit risk. This kind of Grameen style indirect behavior inducing mechanism has been proven successful in low income countries with strong social capital, but it's less likely to work in every context. And I don't see there is any alternative of information sharing.
Yeah. And looking at the time, perhaps just one final question to wrap it up. How important do you think is the adoption of technology amongst microfinance institutions?
Very important, very important. And we have seen that many microfinance institutions are increasingly using technology. Okay, so to reaching out the poor. First of all, in order to deliver loans, during the pandemic, we have seen many microfinance institutions have adopted mobile technology. So loans are being provided and repayment is collected through mobile phones. Okay, and this is the future of microfinance because it has the ability to reduce the cost of borrowing. Okay, so one of the major problems that we see in microfinance industry at this point is very high borrowing cost. Okay, interest rate is very high. So with increased adoption of technology, borrowing cost can be reduced. And that is actually the future of microfinance. Okay, and another important thing is I just told you about the importance of information sharing. So when things move from pen and paper to a digital platform, a mobile phone based platform, information sharing in collection, preservation of information and sharing that information among lenders, it will become a lot easier. And this is where the entire industry will be moving towards within the next 10 years, in my understanding.
Yeah, that's great. Definitely makes sense. Also, I know we might touch on this further in the presentation by our teams, but we have also done a lot of work when it comes to helping MFIs adapt to that technological disruption and the necessity of innovating as well. But other than that, thank you so much, Dr. Abu, for presenting and answering our questions. It's always great to have you on board. And it was a great perspective to hear when it came to that original Grameen banking model. So thank you so much for your time.
No, thank you. It was a pleasure to talking to you. And I'm looking forward to work with you again in the future. It was my pleasure. It was my pleasure. Thank you. Thank you very much.
Thank you. Enjoy the rest of your night.
Thank you. Bye.
Bye. Right. So now on to our final part of this event. Pass it on to Angus to introduce our MMI initiatives presentation.
Perfect. Thank you, Anita. And thank you as well to Dr. Shah and Megan for those great presentations that we've just enjoyed. So the next part of this session will be a presentation from our initiatives team. Anita touched on this briefly at the start, but they are our student consultants. And effectively every year we work on around 6 projects. And they're responsible for typically going into these countries and conducting first-hand research, primary data collection. But there's been a lot of adaptation that has taken place over this period of time, given the COVID circumstances. But if we hone into our impact a little bit further, on the next slide, we can have a look at the number of projects that we have conducted. So that has been 42 over 12 countries since our inception, with another 6 this year. And alongside this, we have our operations division who run events like this, and they're really responsible for engaging a lot of different countries and creating MMI's position as a thought leader and driver of social impact and change amongst both student bodies, which is our primary focus, but also beyond in these local communities. So I'll now look to hand over to Jade and Faith, who are our Vice President of Initiative. They each handle the allocation of projects and oversee the different projects that do take place. This will be accompanied at the end by a Q&A session with various project leaders, but I'll hand over to them to run through our service offerings and the life of a student consultant.
Thanks for that, Angus. Hey everyone, I'm Faith. Just to give a little bit of background about me. So I joined MMI last year as a project consultant. I worked on an international market expansion project for a fintech social enterprise in Myanmar. Jade, do you want to introduce yourself?
Yeah, thanks, Faith. So with my MMI journey, I joined in 2018 as a consultant and then moved into project leading and now vice president. And I worked on a Philippines project with Ayala and conducted a social impact evaluation.
So as Angus mentioned, Jade and I oversee the 6 pro bono consulting projects we run for our clients each year. And over the past 10 years of our operation, we've been able to develop our capabilities in 5 key areas predominantly. So firstly, social impact evaluation. So pretty much like helping our clients assess the impact of their programs using both quantitative and qualitative methods, as well as identifying ways that they could improve upon these. And secondly, credit risk assessment, which often takes the form of helping our clients streamline and standardize their loan application process, and the means through which they assess their borrowers' repayment abilities, which is really key to maintaining a good loan portfolio and minimizing defaults. Also market expansion, so helping our clients expand into new regions, customer segments, or markets, either domestically or overseas. Fourth, developing training for loan officers, program management, support staff, or borrowers. And finally, product development, which we'll be going through an example of later on in the presentation. But besides these core offerings, we do remain open to projects in other areas, and we're constantly trying to hone and develop our capabilities through knowledge retention and other initiatives. So for example, we've recently expanded into the buy now, pay later and microinsurance sectors, helped organisations with digital transformation strategies, as well as undertaken projects centred around HR consulting and business operations consulting. So this year we've got some really exciting projects which have just been kick-started. So just last week the teams were actually introduced to their clients and have been setting up introductory meetings with them since. And we're really excited to be welcoming 3 new clients on board with us this year. So firstly, the Eflatana Microfinance institution in Laos. The team this year will be helping them develop a digitisation strategy to assist their field team and borrowers in transitioning to a more digitally compatible and cash-light model. We also have Grameen Philippines on board this year, who have engaged us to help them roll out a new pilot product in the other branches of their organisation. We also have the Microinsurance MBA Association of the Philippines, or Remanzi. So the MMI team is going to be helping them to create a business performance evaluation tool and a social audit framework for the microinsurance providers in their network. And also returning with us this year, we have Good Shepherd Australia New Zealand, who you've heard about from Megan before. And the team will be undertaking a credit analysis project, specifically looking at how the pandemic has impacted people's access to credit. We also have then the Ayala Foundation, for a social return on investment analysis for one of their sustainable livelihood programs in the Philippines. And finally, we have the Indonesian Ministry of Finance, where we'll be helping them develop social impact evaluation training for their regional offices. So as you can see, we've got a really diverse array of projects and clients this year, and we're very much branched out from consulting just for traditional microfinance institutions into projects with not-for-profits, fintechs, and government organisations centred around financial inclusion more broadly.
Yeah, and in terms of where MMI fits in, so just in the next slide, we really just help to scale or optimize the already present impact created by an MFI. So it's really important for us to show you how microfinance institutions that we work with create their own impact. So here we have some anonymized data from a previous client of ours, which really highlights the amazing opportunities that their microfinance loans have provided their borrowers specifically. As Dr. Sharia, Megan, and Nita have indicated beforehand, the impact of a loan is pretty enormous, not just for financial stability, but also in terms of holistic support, as indicated here. Microfinance has an impact on communities, not just individuals, and this is the impact that MMI strives to be a part of. And so just over to the next slide, due to the nature of consulting, we consider one of our roles and initiatives to be problem solvers for social impact. And that's where we assist organizations that might be understaffed, under-resourced, or simply desire an external perspective on their organizational challenges. And to place this problem-solving process on a timeline, Faith and I would have reached out to organizations during the summer to prepare these contracts. And then project teams are then conducting the research, the data collection, either remotely or via project trips, and produce 2 or more final products, also known as project deliverables, over in the November-December period of this year.
Yeah, so most of these deliverables will include an analysis of the root cause of an issue that an organisation might be facing, such as this anonymised deliverable, which identifies 3 reasons why the microfinance institution isn't fully achieving their organisational goals. And just going off the timeline that Jade described earlier, so after conducting a preliminary analysis of the issues that the client is facing, the team typically then undertakes primary market research through surveys, interviews, focus groups, workshops, and other methods. If we just want to go on to the next slide. Yeah, thanks. These help our teams validate any initial problems or solutions they previously might have identified, while also highlighting new insights that could have been overlooked during the desktop research phase. And in previous years, we would actually undertake in-person project trips overseas during the winter break to conduct this primary market research, but obviously because of COVID travel restrictions, project trips weren't able to go ahead last year, and neither will they be going ahead this year. However, it may be something we look to start up again in the future once this situation has sorted itself out a little bit more. But in the meantime, we've been able to adapt our operations and try and figure out ways of collecting primary market research remotely. So through partnering with organisations based overseas or getting our clients to help facilitate this.
Yeah, and as shown here, there are a number of recommendations that we might make to a client after making that research via our data collection process or desktop research as well. And so that might be a brand new product, approach, or recommended market for expansion. And I guess moving on to the next slide, as such, MMI's initiatives division really seeks to create impact through not just our findings, but also our recommendations. And those intended outcomes can involve helping organizations reach or maintain financial sustainability, improve their client retention, and enhance their overall reach and therefore impact within their chosen or intended communities.
Beautiful. Thank you for that, Jade and Faith. Now we'll launch into a bit more of a general Q&A. So Vishal has put down a Slido link in the chat, so feel free to ask any more questions on. And while people get that up, maybe I'll introduce Vincent and Alex as well. two of our project leaders this year. Would you, Alex and Vincent, just like to have a quick chat about your time on MMI and the projects you've been involved in?
Sure, thanks, Angus. I guess I'll start. So, as Angus said and introduced me, my name is Vincent. I joined MMI last year as a project consultant, now as a project leader. A little bit about the project I worked on last year. So essentially, I worked on an SROI framework for the Indonesian government's Ministry of Finance. Essentially, what that meant was trying to quantify not only just the financial improvement, but the general social and well-being improvement in those aspects as well, and quantifying that in a way which was typically considered qualitative. And especially during the COVID era as well, the project turned out to be quite interesting and intriguing with a lot of little nuances that we found out throughout the project. And as our VPRs said, we weren't able to go and conduct a lot of ways to do primary research due to the pandemic, which sort of challenged us to find more innovative ways through technology to gain that data itself. But that was also beneficial in terms of figuring out how we could reallocate existing resources as well and sort of create a bespoke model with the resources that we had. However, all in all, our project was received successfully, and we ended up building a model across a whole range of different outcomes, which was generally weighted based on the priorities of both borrowers and the Indonesian government themselves. And now I guess I'll pass it on to Alex.
Hi, as introduced by Vincent and Angus, my name is Alex. This is also my second year at MMI. I joined last year as a project consultant, and I'm working on the Ramanzi project this year to provide microinsurance solutions to low-income individuals. And last year, I actually worked on the Good Shepherd project that MMI was a part of, and we looked at how the buy now, pay later sector, specifically the debt that the sector creates, disproportionately affects women, and conducted a gendered analysis to provide some recommendations for how women and other low-income individuals in Australia can manage their debt better while still being able to enjoy the benefits of buy now, pay later.
Beautiful. Thank you, Alex and Vincent. That was really comprehensive. Perhaps starting at the beginning of a life cycle of the initiatives process, could someone maybe describe how MMI selects those clients, or whether they approach us, and what that process is in terms of actually creating a project to work on?
Yeah. Sorry if I jump in after I start in. I guess in terms of the general criteria we use to assess an organization, some of the factors we consider is whether or not the services and products they provide actually align with MMI's expertise and specialties, just as Faith indicated in the slide before. Will we actually be able to make a strong enough impact in terms of what they're asking for us to do? And some other factors is whether we already have an established connection. We do try and prioritize old clients over new clients so that we can really scale that impact over a number of years. In terms of international versus domestic, it really depends on the size of the organization. Obviously with COVID, we're not as able to conduct those project trips, and so the organizations that we work with internationally need to be at some level of scale to be able to communicate with our teams and produce data for us as we collect data remotely as well. Faith, was there anything else I missed?
Yeah, I think you pretty much covered it all. Like, it's definitely in line with our mission to try and help out smaller and more underserved organizations. But as Jade mentioned, we also do look at helping out larger organizations, not only because they have the capacity to facilitate that remote data collection, but also because they could still use our help in a lot of ways. And through the scale of their organization, we're also able to reach like a much larger client base and have a greater impact on more communities as well.
Perfect. Thank you for that. And so there's been a lot of terms thrown around today. We've got vice president initiatives, project leader, project consultant. So could you maybe spend some time actually unpacking what the structure of the teams look like? And then further on in that, what are those key skills that are needed to excel within that team?
Yeah, I can go. Yeah, so a team normally consists of 2 project leaders and 3 consultants, and we work together over the whole year basically to provide recommendations for our clients. And I guess the key skills that are needed due to the nature of the teamwork aspect of all the projects, I think having good team working skills is definitely one of the most important skills. And another important skill I'd add is problem solving. I think that these projects are quite complex and they go over a long period of time because the solutions aren't super easy to find. So problem solving and teamwork would be the 2 key skills I've identified in my time working as a consultant.
Yeah, I'll definitely echo what Alex said. And perhaps to be a little bit more specific in terms of what I consider to be teamwork, it's a lot about balancing expectations and finding out which direction to go to when you do have conflicting expectations, and how to judge those opinions on an objective basis as well. I think in a team, a lot of people have great ideas and have different strategies and ways of doing things, but really consolidating all of that and coming to a client with a clear solution is a skill that's often undervalued, especially in terms of discussion as well. And I think in problem solving too, I think knowing how to tackle things from different perspectives, and not only that, but leveraging other people's strengths and weaknesses and forming those together to tackle a problem more holistically. I think that in essence is what makes teamwork and problem solving probably one of the most essential skills when it comes to solving a problem. And I think in terms of, as well as your analytical and hard skills as well, I think these are just as valuable.
Yeah, just jumping on there to what Vincent mentioned before about leveraging everyone's strengths in the team. I think something that we really do try and prioritize at MMI is just having like diversity within our teams, because that's so important in order to, I guess, get a whole range of perspectives and come up with like the best solutions and the best recommendations we can for our clients. So like diversity in background, in degree, like different backgrounds and everything like that is super important. And we're looking at putting together the teams.
Thank you for that, everyone. And I suppose, so you've heard the key skills there. There was a question about actually joining MMI in the initiatives team. So that will open up next year. Unfortunately, we only recruit on a yearly basis because they are year-long projects, but definitely keep an eye out. And I'm sure any of the panelists here would be more than happy to elaborate on any of those skills if you're wondering further. So I suppose zooming towards further into actually working on projects. So what do you think are your favorite aspects of working on these consulting type of projects?
I could perhaps jump in a little bit. I think one part is, it's not exactly work related, but one part is probably forming relationships, not only with the client, but with your team members as well. I think when you're with people that, you found that a good working rhythm and you genuinely enjoy the project, feels much more enjoyable when you're carrying out the work, and really feeds into the quality of the work that you produce as well. And in a way, I think this might be true for some people rather than others, but I think delving into the complexity of something and trying to find the core of an issue, I think sometimes you're able to see the surface level details and see what's wrong, but not really strike the core of the issue, and sort of look at the 80-20 rule and see what really is the issue that you really need to solve, instead of looking at things on the face value. And I think in a way, going to the little details is what I really enjoy about a project, and I'm sure others do too.
Yeah, I totally agree with what Vincent said. I think also another big part of MMI and the projects as well is the social impact we try to create, and kind of going through a whole year of research, data collection, meetings, and coming together in the end and producing some final deliverables for the client, providing recommendations that they'll actually use, is something that's incredibly fulfilling. And I think that's one of the key aspects to joining the MMI team and initiative specifically, is just to see the impact you can have on so many different people, which is quite incredible.
So to elaborate a bit further on Alex's point, so impact is evidently at the center of what we're concerned about at MMI. It's what our focus is on, and it's one of the core values that our society was founded on. So regarding the background of COVID, what's set in, do you view the impact of projects as having lessened at all or being impacted in any way?
I might just go first. I think that the impact has shifted a bit. I think that COVID brings a lot of new challenges that we in the project teams tried to address as well last year. I think every project added to their scope. They added some aspect of how COVID was affecting our client and their clients in turn. So one could actually argue that COVID has increased the need for social impact, and that we've been able to tackle another aspect of social impact that wouldn't have been there before. I think that based on the results we've seen from our project last year, the feedback we've gotten, I think that the impact we've had is similar to the years before. So I don't see COVID having or lessening our impact for the clients we serve.
I think in general, in terms of generating impact in the context of an SRI framework as well, if I could provide specific examples that may perhaps illustrate my point. In an SRI context where you're trying to gauge you're trying to quantify the qualitative, essentially. You're trying to see what benefit the microfinance loan program has generated. In relation to COVID, everyone, kind of took a downturn. Everyone lost their incomes and stuff like that. But I think what we had to do in terms of an SRI project was have a control group, because everyone could sort of have a downturn in income. But the real question you need to ask is that downturn attributable to external factors or to the loan program specifically? So in terms of COVID, I think that sort of aspect of a control group was especially relevant. And also in the implementation sense as well, I think in terms of data collection, a lot of the existing processes for data collection was done in person. You'd have a loan officer go and with a form to these borrowers and tick off boxes and write stuff down on the survey. Because of the pandemic, that wasn't possible. So we, to be specific, we sort of repurposed and reshuffled resources and staff in order to facilitate call centers, because one of the ways we suggested to collect data was through phones. Initially, we thought there might have been a bias to those who didn't possess phones and who were members of the unbanked, but another example of how we sort of adapted to that was talk with the client and talk about their experience with the borrowers themselves. And I think that really highlighted from our team's perspective, because we were based in Melbourne, we didn't know what Indonesia was like. We didn't know whether everyone had phones or everyone had laptops, but really talking with the client bridged that mental gap. And I think that is a prime example of how COVID affected the impact of the project, but didn't necessarily diminish the impact that we generated, mainly because due to cultural sensitivity, through constant communication and just thinking outside the box in a way.
So Vincent touched on at the end there the importance of being culturally sensitive and interaction with clients as a way to ensure that this is being carried out and being considered in everything that we do. But it also makes up quite an important part of our training program. So I just wanted to ask as well, alongside this, what does that training program look like for consultants, particularly those with no prior experience?
Yeah, in terms of consultants with no prior experience, I think we definitely try and support them with a very rigorous training program. So Faith and I, we decided to start up a new initiative in terms of creating training modules that everyone can watch before our training sessions, which then focus on workshops and really focusing on helping these consultants and project leaders apply the skills that we've covered in the modules beforehand. In terms of topics, so that can involve consulting skills like logic trees and problem disaggregation. There's also report writing, slide deck making, data visualization and analysis. So really at every stage of the project, there's usually a very complementary training module or training session that comes up right before. So.
And some of those training sessions that Jade mentioned are run by us. Some of them are run by our mentors as well from our sponsor firms. So each initiatives team will be allocated 1 or 2 mentors from our sponsor firms, either Bain, McKinsey or Carney. And they provide really valuable guidance for the teams when they're working on their projects and can often help them out when they're facing particular issues or just help them, I guess, find different ways in which they can approach particular problems.
Amazing. So that gives a really good overall vision of our initiatives program and also accompanied by the presentation you guys did earlier. But if you had to summarize how we make impact on clients and communities in a sentence or 2, how would you describe that?
Sorry, was that in a sentence?
A sentence or 2. We've kept the doozies for last.
Yeah, I might try this, bit of a tough one, but yeah, I just summarize it by saying that I think the impact we create really helps disadvantaged communities from all areas around the world. So I think, yeah, that's the main aspect of our social impact.
Jade, do you want to go?
Yeah, I guess to put it very simply, we provide a solution, not the solution, but usually that solution is quite supported by research and evidence that the clients themselves have given us. So yeah, adding on to what Alex said.
I think I won't give my take on this, but I'll probably say it's problem solving with a bit of empathy. I think with microfinance, there's a particular, wait, that's more than just a few sentences. But I guess to elaborate on that particular sentence, I think because it's so focused on microfinance, you tend to feel that, you tend to feel a bit of empathy and feel that you want to do good for some of these people, as I guess opposed to the broader context of consulting. So yeah, problem solving with empathy.
Yeah, I think definitely echoing what everyone else has said, like problem solving with a very human element to it. And I think like one of the best parts of working on these projects is just being able to like work with such amazing organizations and amazing people as well. And just elaborating on that a little bit more, I guess like it's really cool being able to work with all these organizations like in the social impact space, because everyone's sort of so driven by like a common purpose, a common goal of helping make impact on all these communities. And like a lot of times we will partner with other organizations in the social impact space in order to, for example, help us conduct primary market research remotely. And so just everyone is like really willing to help each other out, I guess, and not really expect anything in return, just do it for the good of doing so. That was definitely more than one sentence, but yeah, that's my 2 cents.
Good. There were just plenty of semicolons in that one. But I think on that note, thank you to our initiatives panel. That was an incredibly insightful passage. If we just move on to the next slide. So that pretty much concludes our Microfinance 101 event. Thank you to everyone that rocked up. Evidently, we couldn't have done this without the team behind the scenes. So to the events team that have been pulling the strings, setting up the Zoom calls, sending out all the logistics of this, Caroline, Michelle, Daniel, and Rinky, a big thank you, as well as our communications marketing team have done an incredible job across many platforms. And on that note, please make sure to stay in touch with us, follow our socials, keep in contact, particularly if there have been any key takeaways or things you'd like to see in future events. We have 2 big events coming up. We have Access to Consulting, which is a tailored consulting workshop alongside our corporate sponsors, Carney, as well as Careers in Social Impact, which brings the best and brightest in the realm of social impact and shows that the idea that it's not mutually exclusive, the notion of creating impact and having a corporate career. So be sure to keep up to date with those. Otherwise, good night. And thank you, everyone. And there is a feedback form in the chat as well if you're interested. And please fill that out so we know for future events.
Would you MMI guys just have 1 or 2 minutes at the end?
Absolutely.
Yeah.
Thanks, everyone. That was great.
Thank you.
Well done, guys.
Thanks, Ben.
Ben.
Hey, Ben.
Beautiful. That most of us just MMI left, John. So whenever.
Oh yeah, sure. Okay, great. Wow. That has to be one of the most inspiring things that I've seen all year.